Tomorrow is a very important day. We're going to get the CPI results. I will be covering it live on this channel at around 7:30 a.m. Please join me. I'm going to be covering it on all three of my channels. The consensus is we're going to come in hot at 8.8%. Hot means that it's going to be more than it was last month. Last month it was 8.6, and the month before that it was 8.1, and the month before that it was 8.3. Before that it was like 5 point something. It just shot up. We know what's going to happen tomorrow, and we need to prepare for that. However, there is a lot of good news in the market. Gas prices is down. The national average is $4.65 for regular. Yesterday, the average was $4.67. The week before, it was $4.80, and a month ago, it was $5.01 national average, which means we went from $5 to $4.80, $4.67, and today, $4.65. The prices are going down. The prices for crude oil is at $95 a barrel. The price is down over the last month 20%. And I believe for the last week, we're down like 13%. However, for the year, we're actually up 100%, which means that the prices of gas is in fact going down. The CPI index, it's like a puzzle. Some pieces are bigger, some pieces are smaller. Gas and energy accounts for 35% of the CPI. Gas went up nearly 50% at 48.7% year over year. After that, airfare, 37.8%, transportation, nearly 20%, hotel rooms, household energy, both at 19%. Used vehicles, 16.1%, while new vehicles was 12.6%. Crazy, crazy, crazy expensive to do transportation. The interesting thing is food at home went up 11.9%, with the average inflation being 8.6%. There's only a certain amount of things that you can cut out in your life. You can get a bus pass to travel. You could not eat out. You could not go on vacation. But you need food at home. You need to be able to eat. This is something called basic necessities. Since we know tomorrow the CPI is going to come out at 8.8%, the market started reacting very interestingly today. On Monday, we absolutely got shellacked. Today in the morning, we got shellacked, but the market recovered towards the end of the day, and everybody is looking forward to what's going to happen tomorrow. The gas prices that I talked about earlier, it's very, very interesting. How is it possible that the gas prices all of a sudden are starting to go down? I'll take it, and I'm very happy about it, but how is it possible? The refineries are at capacity. Where are they getting more gas for the prices to go down? At one point, people just stop paying, or there's an influx of supply. One of two things is happening. Right now, people are just tired of paying. So now the gas prices are getting ready for the recession. So they can't charge so much because people don't have money and they're not willing to pay, supply and demand. It's just funny to me that all of a sudden gas prices can go down, but over the last couple of months, they couldn't go down. Guys, it's very important to prepare for what a recession is going to be. It's very important to prepare for when the recession comes. We know that we currently have a recession. We know that the Federal Reserve is probably going to be raising by 75 basis points at the end of this month. The month after that, we don't have a Federal Reserve meeting. And then in September is another Federal Reserve meeting. Probably they're going to be raising also by 75 or maybe 50 basis points. Eventually, the meetings, they're going to stop raising by 75 basis points and they're going to start raising by 50 basis points, 25 basis points, and possibly no basis points. When that happens, that's when this market starts rallying. I truly do believe that we're in the second wave of this recession, second wave of this bear market, second wave of this collapse, whatever you want to call it. I put this all together. I don't think that we're just yet at a recovery, but I do think that we're getting at the second wave. Doesn't mean we can't go down more. Doesn't mean that I'm right. I'm just giving you guys my own personal opinion, and I prepare for this as such. I've been saying this for the longest time that I'm waiting for Q2 earnings, and then somewhere between Q2 and Q3, I'm going to be deploying more money. I am buying every single day crypto. I am buying every single day stocks. I'm nibbling on things, but I will be making larger purchases as I think the time goes forward. I do think that an average recession is 10 months. This is the average modern recession. If we're going to get the GDP numbers for the last quarter at the end of this month, that means we currently have 7 months of a recession. If we currently have 7 months of recession and the average recession takes 10 months, well, we might have another quarter, possibly 2, maybe even 3, but most likely If the past is any indicator for the present and any indicator for the future, then we're probably going to have 1 or 2 more negative quarters. If that happens, think about the dates. Early 2023, probably Q2, maybe Q3 is when we start getting a recovery. Is the recovery going to go straight up? Probably not. But is the recovery going to start going up? Yeah. And then there's going to be something called a relief of pain. Eventually, that relief of pain catches up, and relief of pain starts becoming something called FOMO, fear of missing out. The more the prices are going to go up, the more inflation is going to go down. The more the more the Fed reduces the rates or don't raise the rates, that is exactly when we're going to have a bull run of the stock market and probably a bull run of the crypto market as well. If you look all around you, I know inflation is still expensive, but honestly, go and look at prices. Little by little, prices are starting to come down, mostly with expensive goods, non-essential items, luxury goods, high-end luxury goods. But those prices are starting to come down. And when your high-end luxury goods are starting to go down the prices, this does trickle down to the rest of the economy for essential goods. It trickles down, guys. I hope you found this in some way, shape, or form helpful, and I hope that you guys are going to join me tomorrow morning around 7:30 on this show. We get a good group of people, around 30, 40, 50 people. Looking forward to seeing you, and hopefully your money is doing okay and you and your family are enjoying life. Have a great day.